to Market Minutes. Today, we'll be looking at the first quarter here in Canada. Today, I'm joined by Peakhill Capital's head of Canadian equity, Ira Markus. Thank you for being here, Ira.
Thank you for having me.
Let's dive into the conversation. First quarter has certainly not lacked excitement. The United States elected a new president, implemented tariffs, sweeping tariffs globally, which has certainly had a big impact on our economy. And then on our side of the border, we also had an election very recently. So from an investment perspective, we're seeing a lot of uncertainty. On the commercial real estate side, what are we seeing here in Canada?
Certainty is the name of the game. We're really trying to navigate a market now that is not as sure as it was 5 years ago. So the condo market obviously has come to a halt. And we're looking for alternatives in residential development to those types of projects, whether that's in lower density, low-rise residential for sale assets, where the cost of debt has come down in the last 6 or 8 months, or it's purpose-built rental. The crux of our business at Peakhill and what I've been focusing on most is the development of purpose-built rental. As an alternative residential real estate asset class in this country, we've been seeing lots of developers who've been moving into rentals and looking at ways to make them feasible. It's still very difficult to create a feasible rental project because of the costs associated with it. So that's where our focus will be. And then on the commercial side, we're looking at a little bit of everything, but with a pretty specific focus on the industrial market.
Okay, so obviously housing, affordable housing, that's been a hot topic the last number of years. Industrial real estate, we saw a big buildup during the pandemic. Things have kind of leveled out a little bit, but we could see another resurgence in that asset class. What is the new government, what kind of policies are we looking to see them try to implement, which will help on both of those asset classes?
For sure. I can tell you what will be advantageous and what might be a little bit misguided on the part of the new Liberal government. There was a suggestion by Mark Carney during the campaign. The government create an entity to become a developer. And that government developer would be, tasked with creating affordable housing in this country. I don't know how practical that suggestion is because the creation of a new entity on its own takes time, and the governance of that entity will take time. But it also, to some extent, will cannibalize an existing and very robust development industry in this country, which is really not looking to be replaced. They're just looking for assistance. So where government policy is going to be very helpful is with respect to encouraging capital investment in the country. And they can do that in a number of ways. Mark Carney did suggest during this campaign reinstituting a program from the late 1970s called the Multi-Unit Residential Building Program. And it basically gives investors in purpose-built rental or affordable housing in this country certain tax incentives where they can take the depreciation of those assets and use it as a tax deduction. And that encouraged the construction of hundreds of thousands of units in the late 1970s. It ended up being discontinued because of some abuses. But I think if it was properly controlled in the 21st century, which it could be, that would be a great policy to implement. The Conservative candidate, Pierre Poilievre, made a suggestion that we adopt a policy from the United States. It's called Section 1031 of the IRS tax code, which allows for owners of real estate to take the capital gains that they're earning in their real estate assets and reinvest it on a tax-deferred basis. So that could also be something that would be helpful. On the industrial side of things, it'll take time to see how these tariffs are really going to impact our market and how much onshoring is going to happen in Canada. But I think, the government will have a say in terms of how much new supply is created or supply of goods is created in Canada that will require, industrial assets to accommodate them.
Government policy, getting into the building game, perhaps. Modular housing is something I've heard going around, but we're a little bit of that wait and see to see how policy kind of gets rolled out.
Right, absolutely. We're coming right out of an election, and they can say as much as they want to say when they campaign, but we'll see what actually gets implemented.
Okay, so day in and day out, what are you looking at in terms of opportunities given moving landscape that we find ourselves in?
I would suggest that we're looking at things no differently than we were before the elections, because we're waiting for markets to sort of, normalize. And in so doing, we're looking at all of the same metrics, all the same levers that we have traditionally when we assess an opportunity. We're looking at the cost of land. We're looking at the cost of construction in terms of new development. We're looking at how municipalities get involved in construction costs by way of municipal charges. And that could also be a way, by the way, that governments can intervene to help development happen in a more affordable way. So that's on the pro forma side of investment opportunities. We're looking at markets the same way that we were 6 or 8 months ago, which is by assessing their demographics, their politics, migration in or out of cities, and how they operate as a bureaucracy, how long it takes to get developments through a pipeline. And the biggest, I think, part of our approach to looking at new investment opportunities is how available capital will be to different markets, different projects, different asset classes. If there's investor interest in new development, then obviously that's what we'll be pursuing. If there's less interest in doing new development and more interest in taking existing properties and creating more density or more value in existing properties, then we'll be shifting our direction that way.
So from an underwriting perspective, the same things you were thinking about before the election and before the tariffs, we're still thinking about them. We're still looking at deals the same way, but perhaps with a little bit of a different lens than maybe we would have before. Looking ahead to Q2, what's top of mind?
Tariffs are definitely top of mind. I mean, it'll take some time to figure out how these will play out and how they will affect the cost bases of different projects that we're doing. We're going to be looking at government agencies and how they affect the financing of specifically purpose-built rental projects that we do. So the CMHC, which has a number of programs, a number of policies, they're moving very tenuously. And I think we'll have to see how they proceed in terms of allowing for more debt capital to encourage development in this country. So that will be top of mind as well, just being in touch with CMHC and sort of close to the pulse with them. And then we'll be looking at how immigration trends continue into Canada in light of this most recent election, in light of the U.S. election, whether there will be any shifts in the demographics from the U.S. up to Canada or across the country to help encourage new development in places like Alberta, where we've been seeing a lot of migration, interprovincial migration over the last couple of years.
I think there's one thing you left off your list,
which is
playoff hockey.
Playoff hockey should definitely be on the list. You have a great playoff gear.
Thank you, Ira, for all of your insights and for your time today.
Thanks for having me.